The broadcast is now starting. All attendees are in listen-only mode.
All right, okay, good. Sorry for the slight delay, right? There was some technical issues, but I think we'll manage to solve it. Right, so great. Welcome everyone to this webinar. We'll get started. Okay, so again, this is the entire indicator series where every week, Monday evening, same timing about 9 p.m., we'll come in to share with you a specific technical indicator. And of course, the intention over here is to expose you to more indicators and give you some insights into how these indicators are being used. Hopefully, you'll be able to, if you enjoy it, if you feel that that indicator is something that aligns with you, then great, it'll be able to help you in your trading journey as well. Okay, so today, my name is Kar Yong, and I'll be sharing with you about Bollinger Bands. I think this one here isn't foreign. Okay, if you have been trading for some time based on technical analysis, you probably hear about this indicator before. Today, we'll share with you a little bit into what it is and what are some of the common strategies that traders actually use Bollinger Band to actually trade the market. Okay, so quickly over here, very quick introduction about myself, especially for those of you who are very new, perhaps first time hearing me or never actually hear of me before. Again, very quick introduction. Myself over here is Kar Yong. I've been trading since 2012. That's where I got started in the FX market, and I've been actively trading the currency market, the Forex market, as well as the stock market since then. And of course, I've been traveling around various cities and countries, sharing my journey as well with fellow traders. Okay, and I think this is also pretty important to share with you some of the recent results that I have, so that you know, okay, whatever I'm sharing with you today comes from the experience of a trader, okay, and not just the theoretical stuff, but it's something that is very practical, that I myself apply into the financial market. Okay, this is my 2019 FX result. Okay, of course, it's a little bit back already because we are already in 22-1, right? But nonetheless, it's still a pretty decent year for me in 2019. Okay, this is in 2020 is a little bit not so smooth sailing. Okay, 2020, which is last year, my FX portfolio only kind of like I have a returns of only about 8.5% for the year. Not something that is very fantastic, right? But I'll still take it, okay, because 2020 is indeed a tough year for many people. Okay, this is my last year result in the US stock market. Okay, so I'm also actively trading, investing in the US stock market as well. Last year was pretty fantastic. That was about 36% return. Okay, so that's a quick one about me. If you like to connect with me on social media, on Facebook, on Instagram, just feel free to search out my full name. Okay, I'm Kar Yong. You'll be able to find me, and you can add me on Facebook as well as Instagram. Okay, I do post quite frequently among regarding to trading, investing, finance, and some of the learning points and what's happening in the financial market. I do post them actively on my social media. Okay, so that's a quick one about myself. But today the focus here is, of course, giving you the value, okay, providing you that insights and knowledge about Bollinger Bands. Okay, so by the end of today's presentation, of course, you'll be discovering what are Bollinger Bands. Okay, this is a quick introduction to this indicator. I'll share with you two common ways of analyzing and using Bollinger Band. Okay, so that at least if you're very new to this, you can understand and appreciate what this indicator does, what is the strength of this indicator, and of course how you can utilize it for your trading. Okay, so the strategy component I think is pretty important as well. Okay, and I'll leave some time at the back of today's presentation. We'll go over to some of the live charts to apply what we've covered. Okay, that means we'll look at live analysis using Bollinger Bands, sharing with you some of those insights. And of course, if you do have some questions, do feel free to ask them at the end of this presentation, right? That's where we have the Q&A session. Okay, so let's get started by understanding a bit more into what are Bollinger Bands. Okay, basically it's a technical indicator developed by John Bollinger. Okay, of course, right, that's where the name comes from. And the idea here is that you need to first understand what this indicator does. Of course, you do not need to go and learn the formula of it. Okay, but I think it's very important to understand what this indicator does, because what I've seen is that a lot of traders, when they get started off, they just simply follow and blindly apply the indicators on the chart without knowing exactly what the strength of the indicator is. Okay, so you want to know that if today you're using BB band, right, which is Bollinger Band, what you're using it for is to measure the market volatility. Okay, and in a very easy and simple way to understand volatility, I always use the concept of like wave. Okay, so if today you go to the beach, you like to surf. Okay, you naturally need to have wave coming in, right? So if the let's say the water, the sea is very quiet, then there's no wave, you can't really surf. Okay, so the idea is that a lot of people, when they hear about volatility, they think that if there's volatility means it's risky or it's dangerous. Okay, no, it's not. Because if today the market is not moving, there's no volatility, there's no way you're gonna make money, right? If today you buy at, let's say, $1 and then 10 days later the price is at $1.10, you literally make no money, right? You make the 10 cents. Right? So you need volatility in the market to make money, but at the same time, you need to know how to protect yourself against such instances, right? Or if, let's say, the volatility suddenly becomes so great, yeah, you need to know how to protect yourself, right? So if like a tsunami come, you better don't surf anymore, you better run. Okay, so same concept. Okay, and Bollinger Band is often used to measure this thing called volatility. Okay, and over here you want to understand that later I'll show you some charts. You probably, if you haven't seen this indicator before, later I'll show you some charts, right? So as the name suggests, the Bollinger Band, so there's a band, and this band tends to change according to market condition, right? So whether the volatility is quiet, is low, the band will have certain look of it. And then if the market condition becomes very volatile, then the band will change itself, right? So over here, to give you a very quick understanding, BB, okay, in short, stands for Bollinger Band. Okay, you probably hear a lot of traders just say BB, right? So the idea here is that Bollinger Band, this indicator, there is 3 lines to it. Okay, so some technical names. There's the upper band line, there's the middle line, of course, you have the lower band line. Okay, so every Bollinger Band, you would have 3 lines. Okay, of course, sometimes traders will just hide the middle line and they only show the upper band and the lower band. Okay, but I want you to understand the full picture over here. Okay, and the middle line essentially is just your simple moving average. Okay, and this topic on the moving average, we have talked about it last week. Okay, so if you miss it, I think you can actually go back and look at the recording. So okay, we talk about that. So today we won't talk too much about the simple moving average, but in Bollinger Band itself, the middle line is actually your SMA. Okay, and most of the time the default setting of this indicator, okay, the period that the SMA use is 20 period. So if you're looking at like the daily chart, then of course this is the 20-day simple moving average. If you're looking at the hourly chart, then that becomes a 20 hours simple moving average, right? So that's the idea of 20 period. Okay, so the idea is also to understand what is the upper band and the lower band. Okay, then of course here you have some mathematical terms like standard deviation. Okay, so if you don't understand about it, it's perfectly fine, but I want you to at least know, okay, the upper band and the lower band by default is 2 standard deviation of the SMA. Okay, so to give you an understanding, right, what is standard deviation or what is SD? Okay, it's basically a measurement of how spread out the numbers are. Okay, give you an example. Okay, so if today your standard deviation is 1, okay, so this is a mathematical formula. You probably don't need to memorize it, but at least understand it and appreciate the indicator, right? So when we say that the standard deviation is 1, okay, what it means is that there is a 68% of the time that price is actually moving inside or within the band. Okay, so for example, if you set your Bollinger Band period to 1 SD, what it means that you want the indicator to help you calculate, okay, based on 68% of the time, I want the price to be trading within the band. Okay, so what does it mean is that in opposite, there's a 32% probability, or 32% of the time the price will actually go out of the Bollinger Band. Okay, so if you set the SD, standard deviation, to 2, then 95% of the time the price movement is within the band. Okay, so I want you to take note of that. Okay, hope you understand that calculation. Right, give me a while. I think I need to mute my phone. Okay, or else you'll be hearing that vibration. Good. All right. So again, you don't need to memorize all this. This is basically really a mathematical formula. Okay, but at least you appreciate what is standard deviation. At least you know, right? When you tell people, oh, I use the Bollinger Band to analyze and trade, and then people talk about the standard deviation and have no idea what it is, then it's a bit embarrassing. Okay, at least you know what it is. Okay, so to give you a picture, okay, to kind of illustrate everything. Okay, let me draw some things here so that you can clearly see. Right, so you can see over here, this is the middle line. Okay, the middle line over here, that's your 20 days. In this day, this is a day chart, right? So this is a 20-day moving average. Okay, and you can see the upper band and the lower band, right? And the default setting is always set at 2 SD, which means that you would see most of the time the price is actually trading within the band, right? There's only some time, let me just clear that as well. Hey, there's only sometimes you can see over here it crosses. This one here it crosses, but most of the time it's actually inside the band, right? So that's the idea of it. The lower the SD, the standard deviation you put, then of course the more times you're gonna see price exceed the band. Okay, so this one here again, there's no like which is the best setting, but over here that's the default. Okay, I'll show you some of the ways you can actually use this indicator to help you in your trading. Yeah, so this is the default setting. So how to trade using the Bollinger Bands, right? So one way to trade it is what we call the BB bounce. Okay, I'm going to share with you a total 3 ways to use it. Okay, so this is the first. The first one here is we call it the BB bounce. Okay, so the concept is that price tends to bounce off the outer band. Okay, and then it tends to return back towards where the SMA is. Okay, so this is again based on this strategy called mean reversion, which means that whenever price tends to go beyond their average, there's a high chance that price will return back to where the average is. Okay, so you're using the band, the outer bands, which is the upper and the lower bands, to act as if they are like your kind of like dynamic support resistance, right? When price touches the top of the band, you go and sell it, and then when it comes back down to the middle, that's where you profit, and then vice versa. If the price goes down to the bottom of the band, you look for buy opportunity. When price goes back to the middle, it bounces back up, that's where you make money. Okay, so the outer bands kind of like act like a dynamic support resistance. Okay, so if you take a look at this chart over here, okay, what you see is that of course, whenever price comes to the top of the band, you can see that, right? It tends to come back into the middle, and then whenever price is at the bottom of the band, it goes back in the middle. Okay, in this case over here as well, it tends to go back to the SMA. Same thing over here, it goes back there, and this goes back here. Of course, this is not going to be like 100% happening all the time, but you can see most of the time it does that. Sometimes when it breaks it, it just go, right? So nothing is going to be 100%, but again, you can see when price is doing that, most of the time it tends to go back to the middle line, which is the SMA, right? So this one here is what we call BB bounce. It's a mean reversion strategy itself. Okay, something for you to consider of how you can actually utilize this to trade. Okay, but one thing you want to take note, of course, is that if you are looking to trade the market using this strategy or technique, okay, the best environment to use it is when the market is in a range, which means that number one, okay, the Bollinger Band needs to be moving sideways, volatility needs to be a little bit small, and of course, price is just moving up and down in a sideways environment, right? So that's the best way to use this strategy. Okay, so what you want to do is to take note of the Bollinger Band width. Okay, usually when it's a range environment, the Bollinger Band is going to be tight. Okay, it's going to be a little bit like squeezing. Okay, let me go back to the chart over here. Okay, so what you do see is that this is pretty tight, right? So you can see this is the band, right? What is expanding, you can see this is going up, right? That's expanding. Over here as well, this is coming up, that's expanding. Okay, so when the Bollinger Band is like, you can also use like clock, okay, to describe it, right? So you can see this one here is like 3 o'clock, okay? This one here is like maybe about 1 to 2 o'clock, right? So you want to spot that the environment of the market is in a range, okay? Then you utilize this Bollinger Bands, okay? Or else you don't use it, okay? So avoid this technique when the market is in a very clear trend, because then the direction is very strong. You wouldn't want to, keep selling when price keep going higher and higher and higher, right? Vice versa. If price is falling, you don't want to keep buying and buying and buying. Okay, so do take note of that. But again, nothing is 100%. Okay, so don't go seeking for that sure win 100% guarantee or accuracy kind of indicator, right? It doesn't exist. Okay, so what happens is that if let's say you want to trade the trend, okay, so just now the BB bounce is where we trade the range. Okay. Now, when market is trending, then you want to use another technique, right? You can still use the Bollinger Band to help you. Okay. And this technique is what we call the BB squeeze. Okay. So you have the BB bounce, you also have the BB squeeze. Okay. So over here, this technique is, the idea is that whenever the Bollinger Band starts to squeeze, that means that volatility is low. Eventually it will break out, okay, which means that if you just imagine like a spring, okay, a coil of spring, okay, you keep pressing it, compressing, eventually it will bounce out, right? So the idea of a breakout concept is similar. Okay, so whenever BB starts to squeeze, eventually it will have a breakout. Okay, and you can capitalize on that breakout. Okay, so give you an example over here as well. Okay, so you can see this is what we call squeeze, right? You can see how the band tends to go very, very close to each other. Okay, and then after this kind of squeeze, usually the market breaks out. Okay, so you can see this is where the widening of band happens, right? It goes in a very sharp 2 o'clock, 1 o'clock angle, right? And then it just keep going. This is the uptrend, and you can see this is the squeeze happening again, right? So whenever there's a squeeze, of course, it can either break to the upside or it can break to the downside. Okay, similar in this case here, it can also come down, right? But in this case, it broke to the upside. So how to trade this technique is that whenever you start to observe that, okay, it's squeezing, okay, you can start to pay attention, or maybe, if price breaks out of the upper band and it breaks out of this squeeze and it closes above the band, okay, that's where, okay, it has potentially broke out. Okay, you can look to trade this breakout here. Okay, same thing over here. Okay, you can see this is squeezing, so you want to look out for if price starts to break, like in this case here, it seems like it starts to break out of the lower band and it close below it. Okay, and that's where, okay, you can say this is a breakout, let's look to sell it. Okay, so that's how you can actually look out for the BB squeeze technique, right? If you take a look at on the left hand side, okay, over here as well, you can see this is also squeeze. You can see when price close and break out of the upper band, okay, that's your actually entry potential, okay, and it starts to go. Okay, so that's also another one that you can keep an eye on. But of course, the market it's not gonna trend all the time, right? So whenever after a trend, it tends to go quiet, it tends to squeeze back in, and then it breaks out again, and then it squeeze, and then it breaks out again. Okay, that's the market cycle. Okay, all this we'll look into a live chart after I go through this presentation, right? Okay, so that's the second technique. Okay, so the last one that I would like to cover with you, okay, the third technique to use Bollinger Band today, is where we're going to talk about the double BB. Okay, so far the first two techniques that we cover is just using one Bollinger Band. Okay, and we either trade the bounce or you trade the squeeze. Now this one here, we're gonna use two Bollinger Bands. Okay, so we're going to combine two different standard deviation so that we can identify the overbought and oversold condition, right? So the middle line of this BB for both is going to be the same, but the standard deviation we're going to be different. Okay, so what does this mean? We're going to use one Bollinger Band at a standard deviation of 2, okay, which is 2 SD, and then the other one we're going to use 3 SD. Okay, so the band will look different, but the middle line is going to be the same. Okay, so over here is that when price is actually between the outer band of the two SDs, okay, it's basically overbought or oversold. Okay, and we can expect kind of like a reversal back to the SMA, right? So pretty similar to the bounce, but instead of just having like, oh, it touches one band and then we look to trade the bounce, okay, this one here we are using 2 SD. Okay, give you an example over here, right? So this is where you can see the outer band. Okay, you can see this line here, this outer band. That's your 3 SD. Okay, and this one here is your 2 SD. Okay, and the area between that is your overbought and oversold condition. Okay, so the concept over here is that pretty straightforward. Okay, you want to see price coming in the area of the two bands. That's where you can look to trade. Okay, so you can see this example here. This is another one. Okay, so you can see this one here. All these are not right because it never go to the upper boundaries. Right, this one here as well. You can see it comes back into the middle. This of course you can see this two here. It comes back to the middle. This one here it bounces back up. Okay, so you can see this one doesn't count because it never really go into the overbought condition, right? This one is, right? So it's more like a filtering process. Instead of just trading one Bollinger Band bounce, you add another standard deviation to it, and that helps to act as a filter, right? So some of it you trade, some of it you don't, depending on whether it hits out of the band, right? So that's the key. Okay, so that's another way you can look to consider. Okay, so before we go into the live chart and apply all this that we talk about, and then if you have any question, I'll answer them. Okay, let's do a very quick summary. Okay, so Bollinger Bands are commonly used to measure volatility. Okay, volatility again is a measurement of how much price is moving. Is it very quiet or is it moving very fast? Okay, so that's volatility. Bollinger Band can be used to trade both the trend and range. Of course, you need to then use a very different approach, right? Either you use the Bollinger Bounce or you use the Bollinger Squeeze, okay? So Bollinger Bounce is to trade the range environment. Bollinger Squeeze is to trade a trend environment using a breakout technique, okay? And over here, of course, we cover two techniques. And if you add on the kind of like double Bollinger Band, that's like 3 technique. Okay, so the most common strategy, of course, is the mean reversion and the BB squeeze. Okay, that's the 2. Okay, and with that, let me go over to the charts to show you some example. Okay, so over here, I'm going to use like, this is gold, right? This is gold, and this is daily, right? We'll start off with just gold, and then we'll look at some currency pairs as well. Okay, again, these are not whatever opportunities I share with you, I don't want you to take it as trading signal today, okay, but use it as kind of like studies, okay, because again, you need to have your risk management in place, you need to have a proper trade plan and everything before you execute the trade, okay. So today we're gonna go and look at it in terms of example. Okay, so now first thing off, okay, immediately take a look at this chart here. Doesn't matter what time frame it is, we're just gonna use daily for now. Okay, I want you to see, right? Over here I have 2 Bollinger Band, of course. One is 2 standard deviation, the other is 3rd standard deviation, 3 standard deviation. Okay, so you can see here, immediately you see this is going sideways. Okay, it's just up and down, right? So you know, okay, this is a range environment. Let's use a squeeze, a bounce, BB bounce technique. Okay, and then immediately you can see, all right, this one here today, okay, in fact, it's a little bit late already, right? That the signal was actually yesterday, okay, or I would say like today's opening, right, after yesterday close, which is Friday, okay, last Friday close. So you can see, again, using the bounce technique, okay, it came down to the upper boundary, okay, of 2 SD and 3 SD, and then next day it closed back in, okay, so actually that was your signal, and you can trade it back to the middle SMA. Okay, another previous signal that just happened recently is here. Okay, you can see it goes up and then it comes back down, it closes. So that is your signal to sell, trade it back to the middle band, right? This is not because it never really go out to the outer band, right? So that's not a signal. This is also not a signal. This is a signal, but you can see when it closes, it's already closing down. So no trade for you. Okay, this is a small signal over here. You can see it closes out of the band and then it U-turn and go back in. That's your buy signal, trade it in. Okay, this is also a signal. Okay, so you can see it closes out in the outer band and then it goes back in, it closes there, you trade it back to the middle line. Okay, so again, you can see quite within just this few period here when it's going sideways. Okay, you have already one solid one. This one is not. Okay, this is another one, 2, 3, and of course this one here is the fourth one playing out so far. Okay, so that's one way you can take a look at it. Okay, and I try my best to show you example that's happening as recent as like right now. Okay, but of course, not every chart will be able to do that, right? So again, over here you can see this is another technique that you can look out for is the BB squeeze. Okay, so every time price goes sideways, eventually it needs to break out. Okay, and when it goes sideways, that's where the squeeze happen, right? So usually a simple technique is, of course, you can use like some line tools to help you, and you can see after this sideways move happening, the squeeze happen. This is where the breakout happens, right? This move up. So you can see it broke out of it, out of this entire sideways move. Okay, and not only that, do you see the Bollinger Band expand? Okay, that's important, right? Because when you want to trade a trend, the Bollinger Band needs to expand. Okay, that's where volatility starts to pick up. So this one here, your signal actually comes somewhere around here where you get a candle to the upside, a green candle, and it closes out of it and you see your Bollinger Band expand. This is your opportunity getting into a buy. Okay, and then from there, that's where you ride the trend to the upside. Okay, so this is gold. I can give you maybe let's pick like one currency pair like commonly used is euro dollar. Okay, so now let's take a look at what's happening right now over here. Okay, so now first thing off, you see that okay, this one here is not very clear whether this is sideways move or not. Okay, but you can still trade the bounce. Okay, take a look at this, right? We are out of this. Okay, it broke out, and we are in the outer band. And then the next candle it closed back in. Okay, so what can possibly happen is can look to trade the back to the middle line. Okay, and of course, if this starts to go down, okay, then that's where you have a downtrend. Then you wouldn't want to trade the bounce anymore. Okay, because the bounce is only for a range environment. Okay, where your middle line is going like sideways. That's the nicest one, right? So over here you can see this is going up at 2 o'clock. You do not want to trade the bounce. This one here, if it's starting to come down like 4 o'clock, you also do not want to trade the bounce. Okay, so you need to learn how to identify that as well, right? So yeah, so not all charts will definitely give you a valid one, right? Okay, but some of it will. Okay, so this one here again, nothing. As of now here, that's nothing, right? Because you can see, yeah, it's going sideways, but you do not have an outer bound. Okay, price never really closed at the outer bound, right? So you do not want to, you do not have a signal. Okay, I don't know, maybe let's take a look at it. Okay, this is more like a move to the upside already, right? So you can see the trend is going up, the Bollinger Band is widening. Okay, so you do not want to trade the bounce. Okay, so always make sure you are aware of that. Okay, so as of now, this is trending, so nothing. Okay, I think even stocks you can use it, right? Or indices. I don't know, like one of the most common stocks right now is like Tesla. Okay, take a look at this, right? This is squeezing. Can you see that? Okay, so this is widening and now it's squeezing. Okay, so when it's squeezing, you know that there's a very high chance that eventually it will break out. Okay, and when it's squeezing, then you of course have your high and low, then you wait for the breakout. Okay, whether is it going to break above or break below, we don't know. Okay, but the idea here is whenever the Bollinger Band squeeze, that's where you know, okay, a breakout is happening, right? So same thing here, right? You can see this. Okay, it starts to squeeze, and then after that, what happened? A breakout. Okay, and then your Bollinger Band widens. Okay, so even stocks, you can see it, right? Some chart, of course, is clearer. Some charts might not be as straightforward. Okay, so again, nothing is gonna be like 100% accurate or precise. Okay, again, these are where you're using the indicators to help you. Some of you might be, in love with Bollinger Band. Some of you might not, kind of like align with it, and you might feel that, okay, I don't really like this kind of indicator. Okay, there's no right or wrong. Okay, but the idea of today's sharing is to really give you an additional tool to introduce you to Bollinger Band and see whether you like it or not. Right? Good. Okay, so I do hope so far you guys are able to understand. Okay, the presentation. Okay, it's pretty straightforward, right? And clear cut. I do not want you to overcomplicate it. Okay, each indicator has its usage, has its strength, and of course have its weaknesses. Okay, so that's what Bollinger Band exactly is, and that's how we use the Bollinger Band. Okay, so don't go and overcomplicate it. Yeah, right. So that's how we look at it. I'm not sure if any of you have questions. Okay, but I'll open up the room now for Q&A. Okay. If you have any questions, feel free to type it in the either in the chat, or you can ask it as a question. Okay, and then I'll keep I'll monitor on that, and then I'll answer a question if there's any. Okay, so yeah, so right now, if you have any questions, you'll be able to kind of like type it in, and then I'll look at your answer, look at your questions, and then I'll answer them. Okay, are there any questions? Good. Okay, so I see To is asking which time frame to apply for FX. Okay, very good question. Over here now, first thing off is I don't want you to have the impression that it's only applicable to one time frame. Okay, now for every technical indicators is the same concept. Okay, the idea here is that because they are technical charts, it can be applied to any time frame and they can be used to trade. To understand which time frame to use is not about the indicator, but is about you as a trader. Okay, so that's more important. Now, if today you are someone who wants more activity, okay, someone who perhaps have a little bit more time to go and look at the market, trade the market, then you can afford to go down to a lower time frame. Okay, because what will happen is that the lower the time frame you go, the more activity, the more data you're gonna get from the chart, and naturally that is equivalent to more trades. Okay, but at the same time, more trades means you need to spend more effort, you need to spend a little bit more time in front of the computer. Okay, and if today you're someone who is perhaps looking more towards like part-time swing trading, maybe if you're working also, and then every day maybe you want to just spend about half an hour, 45 minutes on the chart, then you do not want to go too low a time frame. Okay, so usually what I will do is I'll share with traders. Okay, the lowest time frame you want to really consider is 15 minutes. Okay, never trade anything below 15 minutes. It's not going to help you as a trader. Okay, so the lowest time frame you go is 15 minutes. Okay, and if you take a look at this chart here on euro dollar, 15 minutes is basically what sideways move. Okay, and then what you want to do, you deploy the BB squeeze. The BB bounce. Okay, and of course, if this is squeezing, eventually it will bounce. Okay, so while it's still squeezing, you trade the BB bounce. When eventually it breaks out, that's where you trade the trend. Okay, so the lowest time frame you do is 15 minutes. Okay, and of course, it doesn't mean that every time you have trade, right? Okay, so if you just look at this, of course, this is valid signal, this is valid signal. Other than that, nothing here. Okay, so that is where you can look at it. If you're more active, you can actually afford to spend, I would say, like maybe 2 hours a day sitting in front of a computer to day trade. Then 15 minute to maybe the 30-minute 1 hour chart, that's okay. Okay, now if today you would like to go for like swing trade, or you would like to just spend maybe about 30 to 45 minutes a day in front of your computer, look at the charts, if there's opportunities to trade it, then you will be focusing more on like the 4-hour chart and the daily chart. Okay, so no right or wrong, know which one is better. You need to know which suits you. Okay, to me, the highest time frame you should even consider is daily, right? Don't go anything beyond the daily chart, because that doesn't make sense. Okay, if you go to like weekly chart, yeah, it doesn't make sense for you to actually trade the weekly chart. You might as well like just invest your money in it, right? So that's how I break it down. If you're looking for more activity, short term, 15-minute, 30-minute, 1 hour, that's good. If you're looking for higher time frame, swing trading, you don't have much time to spend in front of a computer, then 4-hour and daily works best. Okay, so this doesn't only apply to FX. If you're trading like commodities, gold, silver, oil, you're trading stocks, same principle. Okay, so I hope I answered your question clear on that. Yeah. Good. Any other questions that you guys have? All good? Okay. Right. Okay. If all is good, right? I hope that this session here is really able to help you understand a bit more about Bollinger Band. Okay. The next webinar will talk about another indicator. Okay. Same thing is gonna be next Monday at same timing at 9 p.m. Okay. I think there's another question. Oh, okay. So To ask another question. BB goes well with any other indicator. Yes, actually you can add in some indicators to complement it. Okay. One indicator I can suggest to you to add on is your ADX. Okay, which stands for Average Directional Index. ADX helps you to also confirm whether you are in a kind of like in a squeeze, in a range, or are you moving in a trend. Okay, so ADX is also a volatility index. It's also a volatility indicator. Okay, and over here you can see, right, when it's below somewhere, the common number that traders use is 25. Okay, so let me put that in. Okay, around that. Okay, around 25. Okay, so the idea is that if your ADX is below 25, okay, it's usually a range environment. So you can see over here, okay, when it breaks out of the 25, that's where you have a trend, right? The band also expand. So you can actually use your ADX indicator to complement the strategy that we talk about. Okay, so whether you want to use the bounce strategy or the BB squeeze, you can actually use the ADX to help you, right? So if you take a look at this right now, okay, let me put that back in 25. Okay, let's say you took a look at 4-hour. Okay, so if you see like, okay, this ADX is above 25, right? It's basically in a trend environment. You wouldn't want to use the BB bounce, okay? Because you know, even here you can see, right? This is more like a 4 o'clock move, right? It's in a trend, so don't use the BB bounce strategy, okay? So that's how you can utilize it. I would say ADX complement the Bollinger Band indicator pretty well. Other than that, really nothing much, right? I can't really think of it right now. But if you ask me straight up, what is one indicators that can complement the Bollinger Band? It will be your ADX indicator. Okay, now my style here is that I don't like to overcomplicate my chart, right? I know some traders like to add on like 4 or 5 indicators all at the same time. I think that's a little bit too much. Okay, for me, I always like to recommend traders to stick to maybe at most maybe 3, right? 2 to 3. That's enough already, because each indicator has its function. Okay, if you add on too many of them, most likely they're gonna just overlap each other, and it's just gonna confuse you. Okay, so yeah, I hope that helps. Okay, so though I hope I answer your question on that as well. Okay, if you ask me, I would say the ADX actually complement the BB the best. Good. Okay, so yeah, so I really hope that this sharing session here give you a much better understanding of this indicator. Of course, you know, trading itself is not just about indicators, right? But this entire series here is really with the intention and objective to provide you a better insights into each different indicator. Okay, but I want you to also be aware that if today you're looking to equip yourself with a trading skill set and things like that, it's not just about the indicator. Okay, you need to have your trading plan, you need to have a strategy, you need to have your risk management, you need to also master your emotions, your psychology. Okay, it's definitely more than just indicators. Okay, but of course, indicators, understanding all this analysis process is also important. All right. So I really hope this session helps. Okay. If you're interested to learn more about various indicators, then stick with us. Come back next week. We'll talk about another indicator, and then subsequent week we'll talk another one. Right. Every week we'll introduce one indicator to you. So yeah. So I hope you enjoyed today's session, and I'm able to provide to you some value. You pick up something. Okay. That's important. And yeah, right. So that's all from me today. And have a good night ahead. And I'll see you guys next week on Monday again. Right. So see you guys. Bye bye.